All right. Hello, everyone. Happy Monday. Welcome to your first market check-in here of 2026 with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market-related discussions, here's a quick disclosure of the current positions Derrick is in as of our stream here today. Again, he's the head trader at T3 Trading Group, so it's just for disclosure purposes. The title of our stream today, New Year Market Update. Derrick, so we're going to get into all the things as we begin 2026. But with it being the first trading day of the new year, how are you feeling so far?
Second trading day of the new year. Friday.
Oh, yeah, there was a Friday. Yes. Well, first
Friday,
full trading week.
Yes, first full trading week. I feel like Friday was still a holiday for a lot of people, but there was actually some pretty crazy price action on Friday insofar as market dispersion, some stocks being really strong, some stocks being really weak. Just coming into the new year, a lot of new positioning is ongoing, and Friday that was happening into a pretty low liquidity environment. I feel like starting today, everybody's really back at their desk. So we're seeing actually some follow through from Friday's dispersion. And what I mean by that is it's kind of a classic January effect that's ongoing right now, where a lot of the stuff that was really strong last year has started off this year pretty weak, because I think that people just didn't want to realize profits in December and have to pay the tax consequences of those profits. And a lot of the stuff that was weak that may have been subject to tax loss harvesting in December has been really, really strong to kick off the year. This is actually exactly what we were looking for and exactly what we were calling for, kind of a classic January effect impact on the market. The only thing that is happening a little bit different than my expectation is I thought that they would begin to front run those moves at the very end of December and the last week of December, and they didn't do that. They really waited for January 1st in order to start moving stock. But then all of a sudden you saw Mag 7 really, really weak on Friday, giving some weakness downside for some of those names today. And a lot of those meme type of stocks that were pretty beaten up by the end of last year, especially where they were from their October highs, have just been really, really ripping higher Friday through today. Some really big moves from crypto and nuclear and quantum and rare earth. All those types of names have just been flowing really, really strong the last couple trading sessions. So it's been a really good start to the year, actually, from price action perspective.
Good stuff. All right, let's talk about the news in the market, and that is the U.S. capture of the Venezuelan dictator Nicolas Maduro. Energy stocks in focus with that happening. I think Chevron definitely benefiting from that. We see the stock up over nearly 5.5% today. That's because they are one of the few companies that does already have a presence in Venezuela. So what do you think about the impact of that news and how you're seeing the reaction in the energy sector and what it means long-term for this sector of the market?
Sure. So, the first order impact that you want to think about, obviously, is what is this going to do to the price of oil? And at least the initial thinking would be, hey, Venezuela has the largest oil reserves of any country in the world, even more than Saudi Arabia. So you would expect that more pumping is going to come out from Venezuela, therefore greater supply, and therefore a lower price. That's the first thing that you would think of. If you do a little bit of research, though, it's going to take some time to get all of that pumping back online. So the research that I've been reading is that you're probably not going to see a real increase in oil output from Venezuela until like 2028, maybe late 2027. So, a couple years till we start to actually see a real increase in that oil output. So the price of oil isn't actually moving too much. If you look at the USO ETF, it's still very much in range. And in fact, it's actually up today. It's up 1.75% right now as we're chatting. So the market doesn't seem to be concerned that there's going to be a massive increase in supply of oil coming from Venezuela that would lower price. So the first order impact on oil itself seems to be relatively muted, but there's a much larger impact on some XLE and OIH names. So, our traditional energy stocks and our oil services names. And within that space, I think that the biggest driver of the movement that we're seeing this morning, especially when you think about like a Chevron or even like a ConocoPhillips or SLB is a big one. A lot of these companies had already done work in Venezuela that they were not paid for. I don't know the exact numbers, but it's Chevron, ConocoPhillips, they're each owed billions of dollars from Venezuela that they have not been paid from. So the thought process is, hey, all of a sudden these companies might get a multi-billion-dollar windfall because with the regime change and everything else that's going on there, these U.S. companies have a much higher probability of actually getting paid. So that's why you're seeing those names up huge. And it seems like the names that are going to particularly benefit the most, at least initially, is one, obviously the companies that are owed money, but two is actually the oil services companies, the OIH names, such as SLB, which is up 11% on the day. SLB has done a lot of work with Venezuela in the past, but I was just saying earlier, it's probably going to take a couple years before the new oil supply really comes online. Why? Because they got to dig it out. So the oil service companies that build the infrastructure to get the oil out of the ground are the companies that are actually seeing the biggest reaction today. So OIH is up 6.25%, whereas XLE is up 2.7% right now as we're having this conversation. So those are the names to focus on. With that said, I thought that the degree to which they gapped these stocks up took away a lot of opportunity at the open. You just gap everything up 5+%. There's not necessarily an opportunity there, and that's just markets working relatively efficient based on the new news. So off the open today, I didn't really like doing anything new with any of the oil names. I actually, by luck, one of the names I've been swinging long for quite a while has been Chevron, which is one of the biggest benefactors of this news. So I dumped a lot of Chevron at like 168, 169, very early pre-market this morning into the initial gap up. They sold these names back down pretty hard early on in the day. In fact, XLE almost filled its gap, but then it presented a decent little buying opportunity down there. So that was the opportunity to maybe get a little bit of stock in some of these names. I do think that big picture, this is going to be pretty bullish for those companies I just mentioned, but not necessarily overly impactful on the price of oil itself.
Yeah. It's nice when news happens to just help a position that you're already in, unexpected news. So
it always feels like it's the opposite, but every once in a while you get a news event in your favor.
Yeah, it's always like, but sometimes it's good. All right. The other big news of the week is that it's jobs week. So focus is on the labor market this week. ADP's private employment report is Wednesday pre-market. Then we get JOLTS after the open on Wednesday. Of course, weekly jobless claims is always on Thursday. And then the big number at the end of the week is the non-farm payrolls report Friday morning. This will be the last one of 2025 and expected to see an increase in jobs, but also an increase in the unemployment rate after that surprise increase in the unemployment rate last time. So when it comes to the data this week, do you think the market cares a ton, or barring some big surprise, it's just kind of a mundane number for the market?
So the market definitely cares because employment is one of the most major components, I think, to the stock market right now, because it helps keep the retail buyer strong, which has been just a massive buyer in this market over the course of the last year or so. With that said, it sounds like the non-farm payrolls number on Friday, which is usually by far the most important one, might still be a little bit murky just from a lack of data related to the government shutdown. So there's probably a further increase in importance on the numbers that come out from these more private companies like ADP. But yeah, it's definitely important. So we'll be watching that. The big themes for 2026, as far as I'm concerned, are maintaining the employment situation. If unemployment really starts to rise, that could be a thing that could really hit into the stock market. And two is obviously just the AI trade and the fulfillment of that AI trade.
Mm-hmm. So you mentioned the January effect already. So when we're sitting here, beginning of January, second trading day of the year, first full trading week of the new year, what's your sentiment on this market?
Overall bullish. I'm overall pretty bullish on this market still at this point, especially now. We'll see where we close today, but the market's set to recapture some key levels. If you want, I can throw up a screen share real quick.
Yeah, definitely.
So SPY's recapturing and closing above 687, as far as I'm concerned, puts the market back into pretty much full on bull mode after we had a little bit of weakness on Wednesday and Friday of last week, which was primarily brought on by the rotation trade that I was talking about. So you can see the Qs are relatively weak. The Qs need to get above 620. They're not there. They're still actually a little bit relatively weak today. And the IWM is where the positive impact of that January effect is really coming from. The Russell being back above 250 puts the Russell back into full-on bull mode as far as I'm concerned. So for the moment, the SPYs are looking great. The IWM is looking great. The Qs are not looking as good, but not necessarily bad either. They'll look a lot better again if they can get above 620. And it's really when you study the chart of the IWM versus the QQQ right now that you can see the impact of the January effect that we were just discussing. Some of the biggest leaders from last year really weakened out as soon as the first trading session of the year hit on Friday. You can see Microsoft broke down. You can see Amazon broke down, though now it's very nicely recovered. I'm long Amazon right now. You can see that Meta broke down. It's also doing a decent job recovering. Again, still not as strong as the IWM, but doing a decent job recovering. But the real exciting stuff has honestly been from some of these what I describe as crappy companies that are in meme land. RGTI, which I'm not big picture bullish on, but I'm long right now because I'm a trader and I'd rather be long something that's going up than short something that's going up. But you can see, RGTI trading really well, QBTS giving a really good 2-day move, like a BE, which I'm not in. Really good move on Friday, more strength today. Or you can look at nuclear names, SMR, left for dead into the end of last year, no buyers to be found, people harvesting tax losses here, really strong day on Friday to start off the year, really good continuation today. Obviously, OKLO is a similar stock there, doing the same thing. Rare Earth is really strong. This one I still am short from, I've been short this thing for months. So I'm fine with this little break higher, and I'm adding into my short actually on the way up here, but just huge day from some of these rare earth stocks as well. So that's really been the impact of the January effect so far, but it's within the confines of I don't know why I can't type. There we go. So it's within the confines of a market that is still overall really strong. And I'm expecting it to continue to stay that way through probably at least mid-February. There's a chance that we could break down a little bit once we hit OPEX in mid-January, but I think it's going to be more like a mid-February story where maybe the idea of AI revenue not matching CapEx might come back into play a little bit. But for the moment, this market's looking really solid.
All right, my next question was going to be for ideas, but you already went through some of those charts that are looking strong. But any of those in particular that interest you, those charts that you were going through?
Yeah, a lot of this stuff has already started to go.
Right.
Like this RKT was an idea really from, I've been sitting in it for a little bit over a week or so from $19, but really kind of giving confirmation through 20. And I don't think that this thing is done. I really like Intel, honestly, on Friday of last week, but at this point, I think you got to be patient. I don't like the way that they gapped this thing all the way up to near 42, which actually was my target, and then now have sold it all the way down and kind of filled the gap on it. But I'm continuing to watch Intel. I actually think that there's like I don't know how to describe it, almost like an insurance trade on Intel coming into play versus a TSM, which is really strong today also, post the Venezuela situation that we went through. I actually think that what the United States did with Venezuela increases the probability of China potentially invading or doing something with Taiwan. And if that becomes the case, then Taiwan Semiconductors might have some issues. And then Intel becomes the company for doing any of the factory related stuff. Though obviously Intel from a technology perspective is well behind Taiwan Semiconductors. But I do think that that's a name that we want to continue to keep an eye on. I broadly like Mag 7, broadly speaking, but there's winners and losers in the space. I like the ones that were able to recapture Friday. So again, Amazon broke through support on Friday, fully recaptured it today, and it's actually set for a breakout right now. I really like Google. Google was so strong on Friday that it never even broke down. It's not trading as well today. Microsoft probably isn't doing it yet, but if Microsoft can recapture like 485, I like it. So, broadly speaking, well, I've got longs and shorts on right now. I'm broadly bullish and looking for continuation as long as the market can continue to hold these levels. And I like doing that through a combination of having some Mag 7 exposure and anything that's relatively strong, not the stuff that's relatively weak. Like I don't like how Tesla, I know Tesla's having a strong day today, but I don't like how Tesla's been looking overall. And at the same time, like I said, I don't believe in RGTI as a company at all. Their revenue is non-existent compared to what the market cap is, but this is a classic January effect trade, and I actually think that these names can continue to have some legs, and crypto too. We called for the crypto long in a big way again on Friday, and now it's finally giving follow through. This is another one. I really thought that they were going to front run when you look at like iBit or again even like an SMR or some of these names that we just looked at. I really thought they were going to front run that at the end of December. They didn't, but now they're finally taking off with some of these names. I think it can have some legs.
All right, good stuff. I want you to take a moment to think back on 2025 and what were some of the things about the year in the market that surprised you, that were kind of unexpected. And then when you're thinking about 2026, what are some of the things that you're focused on that could be more surprises for you when it comes to this year?
Yeah, so 2025 was anything but normal. It was really, really a crazy, crazy year. Obviously, a lot of that had to do with policy coming out of the White House, the tariff announcements, the slow pullback on those tariff announcements consistently over time. I would say two main takeaways for me from 2025 as I continue to grow as a trader, even though I've been doing this for 15 plus years now. I'm still growing, I'm still learning, I'm still improving. One is just the market's further telling me something that I already know, which is that positioning is everything with this market. There were times here where I took a hit going into the summer and in the summer because I was being a little bit too stubborn on some shorts, particularly shorts in like a couple key names, SanDisk, WDC, just because of certain seasonality impacts coming into August, September, et cetera, and also just because of how far we had come off of this low when a lot of the negative implications of the tariffs were still ongoing. But it doesn't matter when you're in June and July and you're looking at buy flows coming from the systematic cohort and from everybody else to the tune of billions of dollars a day. There's a common saying in trading, don't fight the Fed. My preferred saying, even though that's an important one to pay attention to, is don't fight the flow. The flow of funds is everything. And the flow of funds was just so incredibly bullish for so much of this uptrending period of time, June, July, August, September, that it was able to even defy some traditional impacts of seasonality like September weakness, et cetera. So that's one. It's just re-ingraining into my brain something I already know. Flow of funds is everything. That's why my team and I spend so much time dissecting and studying it, because it's just the biggest impact on the market. And the other major lesson for me in 2025 is related to game planning. So anybody that's been around me for a long time knows how much I believe in the importance of good game plans in trading. I think that game planning is the key to success in the business. I'll repeat, because I love to repeat it, a common series of phrases that I say regularly, but I like to say it all the time because I like to just hammer it into the brains of traders on what trading is really all about. So the series of statements goes as follows. The goal of a professional trader is to be what we call consistently profitable. The only way that you can be consistently profitable as a trader is if you are consistent in your actions in regards to the market. The only way that you can be consistent in your actions in regards to the market is if you have rules in place for every single situation that you might find yourself in trading, that actually creates that consistency. So in any situation, you are following a consistent set of rules that actually breeds consistency in your trading, and that defines your edge, and that's what can actually make you consistently profitable. Finally, that set of rules is confined in any game plan that you put on in any trade. So when you circle back to things and put it all together, it's having good, consistent game plans and having the discipline to follow those game plans is actually what breeds consistent profitability. And it's what makes the difference between a successful trader and a not successful trader. It's more important than what your actual strategy is. It's more important than your ability to analyze charts and do technical analysis. It's about, a strong edge that's based in math that is shown through consistent game plans. So because I am so ingrained in that thought process in my brain, traders know who've worked with me, I am ride or die on my game plans. I have a game plan for a trade. I follow it to the bitter end, and I don't change. I am not a believer in changing my game plan as new information presents itself. And the reason for that is because I am not a perfect trader. In a perfect and ideal world, a perfect trader
All right, it seems Derrick has frozen here. So I'm working to get him back online. Oh, he's back. Okay, there he is. Sorry, I muted you for a second, but there we go.
Oh, good.
Derrick's back.
Internet had a very brief drop out there.
All good.
I'm in a little bit of a snowstorm here in Idaho. Anyway, what I was saying was in an ideal world, an ideal trader would be able to adjust those game plans kind of on the fly. But I don't know anybody who's good enough to actually do that. And I think that we as traders are so subject to our emotion and P&L and everything else that it can become really easy to talk yourself out of good trades. So when you have a game plan, you follow it to the bitter end. But I guess one of the realizations I had last year from a big loss that I took is that you have to have a game plan that's actually appropriate for the trade. And for me, probably my biggest lesson of the year is coming from my biggest loss of the year, where I had positions on, particularly in SanDisk, but also in a couple similar companies at the same time. And I got the game plan on, and like I said, I'm ride or die by my game plans because that's what breeds consistent profitability. But the fact of the matter is the game plan that I had on was not appropriate for the trade. So that would be maybe the one adjustment that I'm making to my thought process is you have to make sure that you have a game plan that's actually appropriate for the trade that you're involved in as well. If it's not appropriate, then you may need to adjust after you recognize and you say, hey, wow, this game plan is way too much risk or something along those lines, then you adjust. But hopefully you just build out good game plans from the get-go, and then you're always going to be fine. But that is the key to success in this business as far as I'm concerned.
All right, good stuff there, Derrick. All right, I'm going to put you on the spot. I'm going to ask you to make some predictions for 2026, and we'll reflect back on these later in the year and see if any of them came true. So what would be like your 3 biggest, most like out there predictions that you would make for the market this year?
Oh,
I know
man.
You're not one to make predictions, but
I don't love these games because so many things can change as the market evolves and as news evolves and new things take place. But the first thing I would say is a lot of the sell side analysts are significantly more bullish than I am. This market is riding entirely on the AI trade, and it still is yet to be seen on if the CapEx on AI actually leads to revenue that justifies it. So I'm immediately a little bit more cautious. I also think that the market's expensive here, so that also makes me more cautious than probably the average sell-side analyst that's out there. And on top of that, and I don't know if this is multiple things here, but this is just kind of a broader overview. On top of that, it's a midterm year. And midterm years are traditionally the weakest year in a 4-year presidential cycle. So if you look through at all the sell-side analysts that are coming from the big banks, they all have really, really lofty targets on the S&P for 2026. I don't. So I'm expecting a lot of volatility for one, but I wouldn't be surprised if we saw more of a sideways here. So I guess that could be two predictions for you right there. One is that we are going to see a lot of volatility this year. We'll probably see at least 2 10% corrections throughout the calendar year, which is more than the historical average. And also, I think when all is said and done, it's going to be a relatively sideways to down year this year, maybe down small, as opposed to a lot of the big sell side analysts that are out there that all have really lofty S&P targets for the end of the year.
All right, that's 2. Give me like one like out there prediction for what could happen this year. Doesn't have to be like for the whole year, where we're going, but like one thing that maybe might be unexpected, an event that could really impact the market that you could see happening.
I want to say the one I want to say I don't think I should say because I think it would piss people off. So I need one more. I'm just gonna go ahead and no, I'm not gonna say it. I'm not gonna say it.
I'm gonna make you message me after this, so I know.
Fine. That could be like an off the cuff between you and me one, and then if it actually were to happen, then you could be like, "This is what Derrick messaged me about."
Yeah, I'll screenshot it.
One more prediction for the market. I'm trying to think macro. Like I'm thinking Russia, Ukraine. I'm thinking China, Taiwan. But I don't.
You think any surprises from the Fed? Like with the new chairman?
No, I don't think that there's going to be any surprises there. Trump is going to put in someone who's going to do his bidding and is going to cut rates. It's going to be the impact on that dovishness on inflation. That's going to be a really important thing to watch. I don't know if that's necessarily a prediction, but if we just continue to cut rates and cut rates and cut rates in the way that Trump has said that he wants to do, and sometimes he, says things that he doesn't necessarily mean, whether it's strategic or otherwise. If he were to cut rates by a percentage point tomorrow, like he's claimed he's wanted to, inflation would go through the roof. I don't think that we can actually do that. So we get two 25 basis point Fed cuts this year, and that's it. It's not a big prediction because I think it's what the market's pricing in at this point.
Yeah.
But that's also my expectation. So we'll leave it at that, and then I'll message you my other one.
Yeah, because I want to know for sure. I get the inside scoop on your outlandish prediction. All right. I'm going to let Derrick get back to trading. He is a real trader. Again, he is the head trader at T3 Trading Group. And if you'd like to explore an opportunity to work with T3 Trading Group yourself, you can go to t3live.com/DOLive. There's a form there you can fill out, and Derrick and his team will get in touch with you. So again, that's t3live.com/DOLive. Derrick, thanks so much for your time today. Hope you have a great rest of the first week of the new year and a good January. We'll talk next week. Have a good one.
Sounds good, Greta. Talk to you soon. Thank you.